So I believe entrepreneur journey is like a voice of GPS navigator. Put a destination, you should have conviction on destination.
Was your own conviction at any time shaken that maybe am I doing the right thing?
So as I said that we took lots of wrong turns. Time and again, we looked at our destination, recalibrated our journey and achieved wherever we wanted to be. Path is not going to be straight. Next year, it was Harshad Mehta scam. Though people glorified him, but I know darker side of that.
How do you personally deploy surplus capital?
It is contrary to what people would be believing. My investment in equity is zero.
Today on the Create Wealth podcast, I have with me Dinesh Thakkar, who's founder of Angel One, one of India's leading digital brokers. The interesting thing about Dinesh's journey is how he took a traditional business, revamped it, reimagined it, and made it today one of the largest digital companies we have in India. I'm very excited to hear about his own journey, about his passions in cars, his house, how he built his life and lifestyle, something that will be very intriguing for most of us. Dinesh, when you were talking about 1991, when you started your business, it reminded me of when I started in wealth management in 2005. So I graduated out of IIM Bangalore, and when I told my family and friends I'm getting into wealth management, I realized that this industry did not have a good name because 2000, the Ketan Parekh scam had just happened a few years before I started. How did you, coming from a traditional background, decided to get into stockbroking, which if in 2005 it was not attractive, in 1991, 92 it was even less attractive?
It was very difficult, I would say. Like when I entered the market, it was 1998. I did not enter for being into business of capital market. Coming from a traditional family who were into textile, I knew that if I want to start any business, if I take family capital, there would be a restriction in terms of, like they, out of love and care, they would put some restriction. And although I did like lots of kind of like business with my family, but by 1988, I realized that if I take family capital now, I would not be able to explore possibilities the way I want to. I realized that I had a high risk capital, risk appetite, and I should be starting my business with my own capital. I borrowed capital, told my family that I'm going my own way, and I want to start something which involves technology and all that. But it was foolish of me to think about borrowing capital and putting in equity. That's the wisdom of hindsight. But I would say I was clear was I want to start my business which will be having some edge due to technology. So at that time, when I entered the market as an investor, when I lost money, realized that brokers are not giving good service, I started my own broking firm.
Which year was this?
This was 1991.
So Angel Broking formed in 1991.
Angel Broking started in 1996.
Okay.
1991, I was a sub-broker.
Okay, got it.
So I started this broking service, realizing that already whatever bad are happening in this industry, I had experience. 2 years I was investing. So I wanted to create a very transparent kind of like processes and use technology for that. But biggest problem was to get staff. If I talk to anyone that join our industry, he will say, no, there's a restriction. I can't join your this thing company.
Yeah.
So at home, they used to say that we are working in an account firm and all that.
Correct. I'm not surprised.
To my family, they oppose that. You should not be into this industry. It is very speculative and all that. And they were right also, because I realized youth, they are mad. So my younger me was like, okay, I don't think that anything is going to hurt me over here. I'm okay with this. So my family, my dad used to be worried about this industry is not good for you. It is very speculative.
Yeah.
Good thing was that by that time I was married. So there was no problem of getting a partner. So I would say it is kind of a journey where actually you learn, you understand what generation was talking about at that time. It was really speculative. That's the reason I don't love Harshad Mehta. Because they created a wrong kind of like impression, very volatile market. They were just doing what is good for them.
Sure.
They never thought about market or industry. So I would say it is only by 2001, 2002, where actually market started opening to more geographies because of Y2K problem. Lots of new engineers started earning more. They started putting money. That is where professionals were okay to explore possibility in this industry. And I think it is in 2002 or 3 I started getting professionals on board. That is where we started scaling up our business, because they were the one who really helped me to design something which can be scaled up.
Got it. And I think that you've done a fantastic job of attracting talent. You've had people join you from Amazon, Uber, all the global giants, and come and work at Angel One, which is why I guess it is what it is today. But Dinesh, this is not easy, right? Because somewhere after 2015, I think, before 2015, 2018, you had this offline business. You had a very large network of sub-brokers, distributors through which Angel's business was conducted. Then sometime post 2015, you took a call to almost close it overnight and set it up as an entirely digital company. The problem with that is that you have an existing set of team members who work in a certain way. There's a certain way of thinking, operating on a daily basis. How did you make that big shift?
Sandeep, it was not easy, first of all. To external world, it appears that we did it overnight.
Yeah.
So we are a strong believer of data. So data was suggesting after 2015-16, especially after Digital India movement, Reliance came out with data package which were almost free. That encouraged lots of smartphone manufacturer to produce smartphone at a very kind of basic price, where people from tier 3, they can use it. So what we are watching is that lots of people from tier 3 and beyond were consuming content. They were doing shopping online. That gave us kind of conviction that people are ready to put money through mobile app. Data was suggesting that customers who are digital native are now ready to come on the mobile app and do trading on stock market. So continuously watching that data from 2016 to 2018, we realized growth from this digital native is far higher than growth from this urban and tier 1. So we discussed amongst ourselves, whole leadership of Angel, that if we want to be future proof, we need to take care about growth which is coming from digital natives. We tried to work out hybrid model, physical and digital as a separate unit. But what we realize is that our people were trying to justify their CTC and all that by achieving business through physical. That is what they have done for all these years.
Sure.
So I wanted to work out a mechanism where they are totally dependent on this new segment. So we took a call that will close all physical offices in next 12 months. We'll train our people on digital side. Because once we move to digital, we have to match the pricing.
Sure.
If we match the price, that means our revenue will drop by around 65 to 70% per client. And our margins that time was just 25%. So that means we would be bleeding.
Sure.
So we took almost 12 months to train our people how to acquire customer digitally, how to serve digitally. So we made lots of digital properties to achieve our cost efficiency. We envisaged almost 2-3 quarters of losses. Then maybe we thought we will break even. That is because of, again, we had faith on our brand, that once we say that we are also into digital, people would come and use our services. So by 2019, we decided, let us go full digital. We closed all the branch offices, all feet on street, nothing physical. And we dropped our price and matched it to lowest price available in India. We shifted from percentage-wise brokerage to flat brokerage per order. Fortunately for us, market was ready to pick up one more player. And we did not see any quarter of losses.
Wow.
So I believe that this whole journey of transformation from physical to digital took almost 3 years. What external world saw was when we announced that we are going digital. But that time we were almost like 70-80% prepared. for the worst, and we had made lots of kind of testing on different digital natives, how they will accept our services. So overall, I would say very interesting journey, but it requires lots of conviction because you have to think about cannibalizing your own business.
And therefore, Dinesh, during that time, people must have come and said, what is wrong with you? Why are you doing this? Are we on the right track? And in the right intent, people who are well-wishers would have come and told you. Was your own conviction at any time shaken that maybe am I doing the right thing? Because this is a very bold step, and going from a profitable company into a loss-making company in a time when you at some point want to go public, was that not a very nervous decision to make?
You are right, because we took this decision and we had taken a decision that we are going for an IPO. So when we decided that we are moving total digital, we did our calculation. Appeared that we had to take some losses. And there were big boardroom meetings, debating, discussing. But my conviction that we have to go digital never changed. So I believe entrepreneur journey is like you should have conviction on where you want to be. It is like a voice of GPS navigator.
Yeah.
You put a destination, you should have conviction on destination.
Yeah.
You may take lots of wrong turns.
Yeah.
But that voice on GPS navigation will never tell you, hell with you.
Yeah.
He'll show you the alternative way.
Sure.
So similarly, I would say I was a guiding force in terms of if at all we go wrong, I would be there.
Yeah.
I have a strong conviction on that destination that we have to be relevant to today's user.
Yeah. Yeah.
So as I said that we took lots of wrong turns, but time and again, we looked at our destination, recalibrated our journey, and achieved wherever we wanted to be.
Yeah.
So that I would say is a conviction of always a promoter or a person at the top.
Yeah.
If he has conviction on destination, path is not going to be straight.
You know, I remember meeting you for breakfast right behind in the dining table, and we were talking about how the culture has to be adjusted with the strategy of the company. When it is a offline first kind of company versus it being a digitally native company, it's not only a change in the business model, but how you are running the company, what kind of people are in the company, how you're incentivizing, motivating them. For you, how was this cultural shift? Because that can also be a determinant of your success.
Very true. Because when we decided to go digital, we thought it would be easy. It's business model and conviction on business model. But when we started recruiting people so that they can help us become digital and help train our existing customers or staff to get aligned to this new business model, we understood culture is a big factor which is coming in our way. In fact, I remember recruiting somebody senior from Amazon, and he worked for 1 year. He told that I'm unable to recruit people. And he in fact designed that you have a very kind of like financial service culture. So I told, why do you feel so? Whatever you want to do, you can do. No, everyone here is like in suits. They are very kind of like, they have a very structured approach. Our approach is a bit chaotic. We want brainstorming. We want people to be coming in whatever dress they want to. There should not be any dress code. The small changes. Apart from being kind of like fixated to business model, to achieve that we need people to have conviction and deliver.
Sure.
So that is where we made lots of changes. And in fact, COVID helped us to start work from home and all that. So that was an added advantage for people to come and join Angel.
Yeah.
Initial 1 year was very difficult to get people who get aligned to our culture. So we had to change our culture.
Amazing.
So we had lots of experts and consultants who helped us to change this culture. Now I can say we are the best workplace in digital area.
Yeah, that's what
Today, if you want to recruit any kind of like person from big companies and all that, they never talk about that you don't have a culture. In fact, they say, we have never seen this kind of a culture even in our company. So that gives us satisfaction. It is not that we achieved success in business in terms of profits and revenue, but when it comes to being agile across organization, we were able to achieve in all parameters.
Interesting. Dinesh, a lot of people watching this podcast would have seen the outcry system only in this show called Scam 92, which was about the Harshad Mehta issue. I'm told a new version of that is coming out now. You have seen that era of stock markets and you're seeing the current era of stock markets. What do you think are some of the behavioral insights about people's style of investing that have changed or have not changed in this time?
I started my career serious into stock market in 1991. Next year, it was Harshad Mehta scam. Though people glorified him, but I know darker side of that. So I would never praise or talk good about Harshad Mehta because what he did was he just attracted people to do gambling in the market and showed them a wrong prices. And when market crashed, retail was unable to pay the difference.
Yeah.
And that was a huge kind of like collateral damage to my career. Almost I lost my capital. I was in debt. Many brokers of bigger sizes than me, they defaulted. And they told it is normal. If you don't have money, declare yourself bankrupt. But coming from a traditional family, we can never accept ourselves saying that, okay, I did not pay to the market. So what I saw was at that time, investors were coming to the market just for the fun and gambling purpose. And mostly if you see only Western India or maybe people from few pockets of Calcutta or Hyderabad, they were active. But I would not say we had an investment cult. So if you look of generation today, although they are entering with option trading and all that, but they understand equity better than that generation. They understand that if we want to create a long-term wealth, equity is the best option. But being young, they are ready to put some risk capital, try it out, try to beat market, which is, we know it is difficult.
Yeah.
But at least they are not the one I have seen that they do trading and they run away from market and put money in bank deposits. So I'm seeing trend is changing from trading, then they slowly start investing in mutual funds. As they will grow their income and saving and get into a serious phase of life where they have family, when they have taken a real estate, they're seriously thinking about buying proper insurance, putting in an instruments where they can create wealth.
Yeah.
So big change in what when I entered the market and today when I see. And in fact, even the regulators are very active. They have created this industry or created an environment which is safer for retail investors. So they have built a good guardrails that somebody wants to really kind of like take overexposures and all that, which is bad for the individual. They have restricted that.
In fact, SEBI, I think, was created as a result of the 92 scam or post that 92 scam.
That's the only one good thing which happened because of Harshad Mehta scam. They became very active in the market.
Correct.
And that helped to expand the market. If you look at in that era, hardly lesser than 1% of population was investing in equity. Today, if you look, the number is quite higher and potential is far more higher.
Yeah.
What we need is a really good kind of like regulation which gives confidence to investor that come to this market, it is safe. Whatever you want to do, at least nobody is going to come over here and shortchange your interest.
Correct.
Now in social media also, lots of people are ready to educate, look at your podcast also. These are a genuine effort to create awareness about this asset class.
Dinesh, you also saw multiple market crisis during this particular time. There was obviously, the 2001 crisis that had happened. Then there was 2008 that has happened. What were you observing when it came to investor behavior in this time? And how did that impact Angel's business?
I think I can't forget this experience of 2001 dot-com bubble. That is where we decided to heavily invest in technology and build 24/7 web-enabled trading platform.
Okay.
So we hired one company who can build a solution for us.
Okay.
Because that time nobody had in-house engineers and all that. And that company told, we are ready with a solution that you have told. It took almost like a year or so. Please order all hardware. So we ordered all the hardware, which was very costly, which was almost 80% of my balance sheet. But I was very kind of enthused about what this internet trading can do in terms of market penetration. But unfortunately, what happened was all internet company went bankrupt, and the company who was making solution for us, they went bankrupt. They declared themselves bankrupt, and I was stuck with this hardware. I don't know what do I do about that. And to add to all this pain, Ketan Parekh crisis happened where Badla trading stopped.
Yeah.
Badla trading is equivalent to FNO segment. Correct. Where 80% of the volume came from Badla trading on BSE.
Yeah.
So my revenue dropped 80%. My balance sheet was eroded 80%. So I would say it was very kind of a difficult phase. And being an entrepreneur, decided now what do I do? How do I overcome this crisis? That is where we thought, why don't we connect whole India through lease line and use all this hardware and give access to kind of a market to customer in our geography the way it is given in Bombay.
Okay.
That actually was kind of first success. And we continued expanding our branch offices. You are talking about 2005. That is an era, I would say, really market took off and all our branches become very profitable. We were able to recover all previous losses. And again, come 2008, global financial crisis and market tanks. But fortunately for us at that time, technology far more evolved. Risk management was better. So there was not a big loss in that crisis.
Maybe business got impacted post that, but...
Business got impacted in a big way. Because if you see, US and Europe were able to recover faster.
Yeah.
Even Asian countries recovered faster. Here, because government was trying lots of social programs and all that, we did not create jobs, only created inflation.
Correct.
So I think India suffered a lot. You'd be surprised to know that demat growth was just 5%.
Wow.
Today, if you look at it, is 30-35%.
Correct.
And India traditionally used to grow at the rate of 20-25%. That was a worst phase, I think, for India and capital market.
And Dinesh, seeing all of these investments very closely, others' behaviors, how has it influenced your own investment patterns? How do you personally deploy surplus capital?
See, I don't know, it's a very simple answer for me. It may appear complicated. I just look at users. If you look at what user wants now, he wants income, he wants appreciation on wealth. That need has not changed. Only platform, the way we approach user has changed. So for me, if this kind of a user base is growing at certain rate, almost equivalent to more than what I am earning, it's very easy for me to deploy my capital. If I'm earning 25-30%, market is growing at 30%, so requirement of my capital is 30%.
Correct.
So for me, it was never challenging to really think about what new things I have to think. I would just watch user, what they want.
Right.
Try to work out a solution. Again, I would just repeat that. It's like that I put my destination.
Yeah.
I want to see this market penetration of 20-25% till that time I'm in the market.
Right.
Whatever user wants, I will just give that.
Yeah.
So my inner voice all the time is guiding me. If I take a wrong turn, recalibrates, go towards that side. So I don't have to think much about what technology or what solution. Requirement is same. Only approach is different. For approach, I need to know that who are the best people in the industry who can give that solution. Provide this solution, you are always on the track.
And in this period, have you taken money out of the company for personal investments also, where you invested in mutual funds, stocks, bonds, FDs yourself, or you don't do that?
It is contrary to what people would be believing. My investment in equity is zero.
Okay.
Not that I don't believe in this. In fact, my investment in equity is 100%.
Because it's
that
your
too
company.
Very concentrated in one. Contrary to what we preach about. Have diversification. Go for regular SIP. SIP is there because whatever I am earning is getting deployed back in the business. But that diversification piece is missing because I have a strong conviction in terms of growth that this industry would witness. And I would like to stay put with this my investment. So I have never taken out any money. Even during IPO, I did not even offer my one share.
Wow.
And I'm very kind of like bullish on this whole industry. So what I feel today is that this youth needs everything on one platform. So when we talk about guiding youth on financial services, meeting their financial goal, it goes beyond stock market. It goes beyond like just wealth management. If you look at today's youth, they want to have good experience. They want to borrow money. They're okay with that.
Yeah.
At the same time, our app has to guide them what is a responsible borrowing. If you're borrowing and entering into a serious phase of life, what kind of an insurance cover you should have? Because your family is dependent on you. So I feel all these solutions can be given by using right AI ML tools, where we can profile a customer, guide them what is right for them, be truthful to their solution, not to our revenue.
Yeah.
That is where I feel it is very exciting space, which will require lots of capital, lots of investment, lots of thrilling for every entrepreneur.
Yeah.
So I feel all my capital I am ready to deploy in just one company forever. Till the time I'm able to meet those requirements of user, give them a right solution using right technologies.
This is very interesting. Actually, when you were talking, there is this thing called RTI, right? So for me, like that is coming out where Angel is responsible, transparent, and innovative. So these three things come out very clearly when you talk about your own experience of Angel. And no wonder it's been one of the best performing stocks post listing. I think from last I remember, it's about 6-7x from the time the listing happened. Dinesh, today you're running a 15,000 crore plus market cap company. You own, I last checked, promoter ownership was in the range of 40 odd %. Do you personally feel wealthy? Do you feel you have made it from a wealth standpoint?
Sandeep, honestly, I was never attracted towards wealth or money. It's a byproduct. Whenever I lost even capital, people who know me, they know me, my behavior did not change. Because I was looking at where I want to reach. My focus was always, do I have enough capital to reach there?
Yeah.
When I felt that, okay, I have enough capital to reach there, I'm excited. I'm full of fun. I love it. Today also, when I look at destination that I want to fulfill, all requirement of user in terms of their personal finance and all that, I feel happy about that. Believe me, I don't look at what returns and all that. That is a byproduct.
Yeah.
I just look that returns and all that just for my investors who have invested. But believe me, if at all I have to think something long term in business, which may become profitable maybe after 5-6 years, I would be thrilled if at all I am able to capture that market share. People may feel that, okay, listed companies are focused on quarterly result. But believe me, at Angel, we don't believe that. We believe, look at longer goals, 3 years, 5 years, 7 years. Try to achieve it. My own example of Angel One, when I started in Angel 91, 92, I went through lots of crises. I eroded my capital. But I was always focused that penetration has to go higher. How do I get to that position? Whenever I achieved some market share, I should be thrilled.
And today, no wonder you're among the top 4 or 5 market shares in terms of equity markets. And I think, Dinesh, there is a little bit of a social angle at what you're going after, because you are making financial services available to people who have typically not invested or not even had exposure to formal things like ETFs, mutual funds, etc. Do you feel it's becoming progressively easier to tell them about the power of this asset? Or even now, there is a lot of interest in fixed assets, real estate, gold, and there's a resistance to get into equities?
You have to divide India into 2 parts. One is people about 25, 27, or maybe 30, I would say, 30, 32. they believe in real estate and all that. But if you look at population below 30, 32, they think about financial assets as a main asset to acquire and create wealth. That trend has changed. Now, if you look at kind of like Gen Z, I think they are an population who don't believe in even credit cards and all that. So we have to understand things have changed. And if I look at larger population who is going to kind of like be a wealth owner and all that, they would be more on digital side. So it has become very easy for them to have an access to all the markets. So when we talk about access to all the market, mostly it is financial assets. And they believe in like regular investments and all that. And see, what has happened is because of social media and exposure to lots of digital content, they're able to evolve and understand how to meet their needs faster.
In fact, you mentioned social media, and I was thinking about this whole role that finfluencers have played. Lot of debate right now about whether the role has been positive or negative. What is your perspective on this, Dinesh? Why did influencers come up in the first place, and have they truly added value, or have interest been hurt, consumer interest been hurt in the process?
I think they started journey with a good cause. They got followers and all that. But when it came to monetizing that followers, they got greedy, I would say. And they entered into an area which was prohibited. If you are an advisor for any financial service, you need to be registered.
Correct.
You need to be qualified. You cannot say that I am on social media, I am just giving my view. But if you are taking money for that, you have to be responsible. It is like pharmaceutical. Would you agree to anybody's advice if it's not medically qualified? You would say, please, you are not qualified to give advice. So money and medicine, I think it is same. You cannot play with anybody's money.
That's right.
So I would say influencers are needed when they are creating awareness, when they have some kind of like a good intention, and work out a right kind of monetizing kind of like a model with manufacturers. But giving wrong advice, giving wrong kind of like screenshots, that is criminal, I would say.
A lot of that happened lately. But I think this is by far the best house in Bombay that I've visited. Was building a great house always a passion for you?
Very honestly, no. Because I was so much involved in business now, I used to always think about business. So one day, like my wife told, don't you think that we should shift to a good place? So I thought, why not? Yes. That is where I bought this house, and I thought now that we are shifting over here, I have an habit of staying in one house for 25, 30 years like that. So I thought this would be like for good. So let me build it properly.
In fact, Dinesh, one thing that I always notice whenever I've come here is your passion for cars. Even before I first met you, my co-founder Sahil, who's a friend of yours, he told me about your interest. And I remember going at that time and seeing your Instagram page, where every photo practically is about you with one car or some new car that is coming. In fact, back behind us is also miniatures of some beautiful cars. Was that cars also a passion for a long time for you?
Always from beginning, car was a big passion. And in fact, when I started my business and I bought at that time Fiat, black Fiat, and I started driving, I felt that this passion is going to override my business interest. So in fact, I stopped looking at cars till the time I achieved my goal in business.
Dinesh, thank you so much for hosting the Create Wealth podcast in your beautiful home. It's always a pleasure to learn from you. We look up to your own personal journey and your advice and guidance. Thank you so much for that.